AstraZeneca reports earnings tomorrow, and Wall Street is expecting a big move. Is this your last chance to buy before the rally, or is another sell-off just around the corner? Let's break down everything you need to know. AstraZeneca is currently trading around $169.26, with a market capitalization of approximately $262.5 billion. The company remains one of the world's largest pharmaceutical businesses, generating over $60 billion in annual revenue and more than $10 billion in annual net income. Its P/E ratio of 25.5 suggests the stock isn't cheap, but it's also not excessively expensive considering its long-term growth potential. The biggest catalyst is tomorrow's earnings report. Wall Street expects EPS $2.48, revenue $15.45 billion. Over the last several quarters, AstraZeneca has consistently delivered strong earnings. If management beats expectations again and raises guidance, investors could quickly push the stock significantly higher. Technically, AZN is sitting near an important support zone. Key levels include strong support, $165 to $168. Major support, $155 to $160. Resistance, $190 to $195. Major resistance, $205 to $210. As long as buyers defend the current support, the long-term uptrend remains intact. However, disappointing earnings could trigger another sharp decline. Wall Street analysts remain optimistic. Average price target, $216.02. Highest target, $247.74. Lowest target, $153.83. The average target implies roughly 28% upside from today's price, showing that many analysts still believe the stock has meaningful long-term potential. Here's why investors remain bullish. Strong global pharmaceutical portfolio, consistent revenue and earnings growth, healthy profitability, reliable dividend yield of nearly 1.9%, long pipeline of new drugs that could drive future growth. These factors make AstraZeneca one of the stronger defensive healthcare companies. There are still risks. The biggest one is tomorrow's earnings. If revenue or earnings disappoint, or management gives weak guidance, the stock could easily revisit the $160 area or even lower. The pharmaceutical industry also faces regulatory and patent-related risks that investors should monitor. For long-term investors, AstraZeneca continues to look like a high-quality company. Buying gradually over time may be a smart strategy. For short-term traders, however, waiting until after the earnings report could reduce the risk of unexpected volatility. Sometimes protecting your capital is just as important as finding the next big winner. Overall ratings, fundamental strength, 9 out of 10. Valuation, 8.5 out of 10. Technical setup, 7 out of 10. Long-term investment, 9 out of 10. Short-term before earnings, 6.5 out of 10. AstraZeneca remains a strong long-term investment, but tomorrow's earnings could determine the stock's next major move. Do you think AstraZeneca will beat earnings and rally toward $216? Or will the stock fall after the report? Leave your prediction in the comments below. If you enjoyed this analysis, like the video, subscribe to the channel, and turn on notifications for more stock market insights and investment opportunities. Thanks for watching.